Hi and welcome to Trade of the Week. This week's trade on the DAX was only partly down to technical analysis. My entry trigger was the release of some economic data. Yesterday a lousy opening in stock markets had my bearish antennae twitching, but I spent the morning watching equities slowly recover. I already had a short trade set up in FTSE on the boil, but fancy having a go at the DAX as well. The DAX had looked to be leading the morning rally, but it started to lose its fizz over lunchtime. On a trade like this, where I'm looking for an early trigger, I dropped down to the more sensitive 5-minute chart. And here my reversal indicators were mounting up. The declining price had turned the parabolic curve to red as it fell below the 21-period moving average. That's round about there, and at the same time the RSI had dropped below 50. But two things were holding me back. The price continued to be supported at the 5700 level, and also the US housing sales were due out at 3 o'clock. So that's the support line that was concerning me at the time. My strategy was simple: to wait for the data release, and if the number was bad I was going to hit the bid immediately. If the number was good, I'd hold off and just see how much the bulls cared about life. But regardless of where I entered the trade, I decided to place my initial stop loss at 57.30, just above the lunchtime high. If the price returned above that level, then I was wrong about the whole trade and I should be out of it anyway. Usually when I enter a trade, I set a limit order to buy back £2 of it for a 30-point profit, and then run the balance with a trailing stop. But on this occasion I've been suspicious of the morning's rally and felt they were due a decent sell-off. So I opted to run the full bet until some technical indicator flashed a warning sign. And as usual, I'd rely on some mystical signal like a candle pattern or a moving average crossover to close out the trade. So, how did it go? Well, the US housing data came out much weaker than expected. So I hit the bid immediately and I sold £5 at 56.95, just when it broke below the support level there. There's a good argument that I should have closed out the whole trade within half an hour, but I settled for part closing the trade, and with money in the bank I rolled the dice again, and here's why. If you take a look here, there's a really good hammer reversal candle there, and this, combined with an RSI of about 22 at the time, was a pretty good warning sign. It's also outside the lower Bollinger Band as well, so all of that was stacked up to at least take some part profits. That was good enough for me, and I bought back £2 at 56.30. But as the next candle failed to make a new high, I sort of chilled a bit and I was quite happy to ride the trade down again. Eventually I closed out the balance at about 10 to 4 when the green candle closed higher than the previous down candle, and it was also breaking away from the lower Bollinger Band. Do that one. Yeah, down there, that's when the pattern to me was breaking down, so I was quite happy closing out the whole balance then, buying back £3 at 56.05. So that was 65 points on £2 plus another 90 points on £3, making a nice round £400 to stick in my back pocket. Lovely jubbly. Have a good weekend.